Let's start with chapter 2, exercise 2-2, the multiple choice questions. Number 1 is an example of the multiple choice question I have described to you, class, wherein you will be given multiple statements and your task would be to determine whether the statements are true or false. And again, examination questions will not be limited to 2 statements only. There are some questions wherein you'll be asked to determine for the truthfulness of 4 statements. But in our textbook, most of the statements here, most of the questions here are up to 2 statements only. So number 1, first statement. Generally, both quantitative and qualitative basis will be used in assessing the cost and benefit, whether a certain information will be provided, used, and reported. Okay, the first statement is true, class. The considerations will not only be on quantitative concerns, there will also be qualitative concerns in determining whether it is worth the effort of the entity to provide certain information. Second statement, the financial statements are normally prepared on the assumption that an entity is a going concern. Going concern meaning it will continue, it will operate indefinitely, working under the assumption that the entity will continue to exist indefinitely. However, if the intention is different, the financial statements may have to be prepared on a different basis, and if so, the basis used is disclosed. This statement is also true. The prevailing assumption in the preparation of financial statements is that the entity is a going concern. There is no immediate plan of dissolving and liquidating the entity. So the answer for number 1 would be letter A. Second question, in the hierarchy of accounting standards, which of the following is the least to be followed in the preparation of financial statements if a specific accounting standard is absent? The answer here would be letter C, pronouncements issued by the other standard setting bodies. The basis of our answer here, class, does not really come from the conceptual framework. It comes from PAS 8. So I'm not sure if any of you have reached in your readings in PAS 8. In PAS 8, which is your accounting policies, accounting estimates, and accounting changes, accounting estimates, and prior period errors, there the standard states the hierarchy as to which one you should be referring to. Okay, so let's try to do that. In case of for lack of specific accounting standard, class, governing your transaction, which of these 4 do you think should be given the most consideration? Should be given the most significant weight or consideration? It would be your letter B, requirement in other PFRS dealing with similar and related transactions. Okay? And if letter B does not exist, that is the time that we will be referring to your letter A, conceptual framework. Okay? The one with the least weight here would be your letter C. So the question then would be, how about letter D? If letter D exists, class, then it should be followed. Okay? What we are trying to discuss here is what you're supposed to do in case no specific standard exists. But if letter D exists, what does that mean? There is an existing standard. If you have reached past 1 in your readings, which is chapter 3 in our textbook, you would have read there that your issuances from the interpretations committee actually constitute an IFRS or a PFRS. So if you have an existing PIC, it's the same as if you have an existing standard. So if there is a PIC, follow the PIC. It has the same. It is recognized in the same way as your issued standards. Okay. But if again there is no specific accounting standard that is available, you go to letter B, the requirements in the other standards dealing with similar transactions, and then if not, if there is no similar, if there is no standards for similar or related transactions, you go to the framework. Okay, and in trying to apply the framework, you may also make a reference to pronouncements made by other standard setting bodies. Okay. So I hope you understand why letter D is not the number one choice, because again, if letter D exists, it is a different scenario already. If there is an if there is an issued interpretation, then it's as if there is already an existing standard. So the answer number two is C. Number three, which of the following is not an enhancing characteristic? Again, our mnemonic class for our enhancing qualitative characteristics is VCAT. Okay, but of course, students are already expected to know VCAT. That's why examination questions would find other ways to make it confusing to students. As I have discussed in the recorded discussions I have shared to you, many questions would attack on the letter C of our VCAT because we have a lot of letter C's in chapter 2 of the framework. You have your comparability, completeness, consistency. Okay, so some questions would focus on the letter C. Okay, but what is the issue in number 3? Which one is not an enhancing characteristic here? Usefulness, because in our VCAT, the U is not for usefulness but understandability. Okay, so again, for normal accounting students class, knowing VCAT is enough. Okay, but for us, knowing VCAT is not enough. You must be able to remember what the VCAT stands for. It's not enough that you will just look in the choices which one does not start with V, C, U, or T. Okay, you have to know what the VCAT stands for. It's verifiability, comparability, understandability, and timeliness. So that's why the answer in number 3 is letter D. Okay, so who would get number 3 wrong? Only those who remembered VCAT and not what it stands for. Number 4, it is a type of obligation that arises from an entity's customary practices, published policies. So this is basically the definition of your constructive obligation. So the answer number 4 would be constructive obligation. Legal obligation provided by law, contractual obligation provided by contracts. Moral obligation has no place in businesses class. Constructive obligation are those that arise because of your acts. It is not expressly stated, but because of your acts, you may be presumed to be obligated or liable. Number 5, a soundly developed conceptual framework of concepts and objectives should, the answer here is letter B. So all the choices here should be present. Uh, should increase financial statement users' understanding of and confidence in financial reporting. It should enhance comparability among companies, financial statements, and it should allow new and emerging practical problems to be more quickly solved. So again, answer for number 5 is delta. Number 6, which of the following statements reflects one of the benefits of the adoption of IFRS by different countries? The answer here is letter C. Because the standards are already stable, the rules are already organized, then providers of capital tend to be more confident in the financial statements. And financial if fund providers are more trusting of the financial statements class, then they would not be very hesitant to provide the funds. And in that case, the cost of the capital or fund they provide would be lower. Yeah, letter A is definitely wrong. there's definitely benefits from adapting to IFRS instead of generally accepted accounting uh, procedures. Earnings management is not eliminated. And definitely letter D is also wrong. You cannot bring volatility of earnings to zero. The standard is incapable of removing fluctuations or volatility of your earnings. Number 7, first statement, financial information is capable of making a difference in decisions if it has both predictive and confirmatory value. I would understand if many of you would have answered or did, would have classified the first statement as a true statement, but we will consider the first statement as a false statement because it is incomplete. For financial information to be capable of making a difference in the decision, uh, it uh, it can have predictive and confirmatory value or both. But what does the first statement impress upon us? That it needs both. Okay, but even one of the two is sufficient to make it uh, capable of making a difference in decision, thereby making it relevant. Okay, predictive value on its own, enough. Confirmatory value on its own, enough. Both predictive and confirmatory value, definitely good enough. Second statement, faithful representation can be either complete depiction or neutral depiction. A complete depiction means without bias in the selection or presentation of financial statement. It is not slanted, weighted, emphasized, de-emphasized, or otherwise manipulated to increase the probability that financial information will be received favorably or unfavorably by users. Definitely, the second statement is a false statement for two reasons. What are the components of your faithful representation? It's not just completeness and neutrality, it also has freedom from error. But what makes the second statement wrong is that what is being described here is not complete depiction but neutral depiction. So that's why the answer for number 7 would be letter B. Both statements are false. Number 8, if different, knowledgeable, and independent observers could reach consensus, although not necessarily complete agreement, it describes what enhancing characteristic? That would be your verifiability. Number 8 class would be one of the questions wherein you may be able to get it right even without having read the framework. Because this is our commonly accepted understanding of what verifiability is. Okay, and that's why when some students encounter this question only, and they get it right, they would develop a false sense of uh, competence that they can already answer any question just by understanding the question. Okay, that may be enough to get number 8 right, but for most of the questions class, not having read the assigned reading would lead you to wrong answers. Okay, but maybe not number 8. Number 9, which of the following is the definition of income? The answer here is letter B. Okay, letter A is definitely wrong. Income will not result in an increase in liability or a decrease in asset. Letter C is wrong. Income may result in an increase in asset, uh, decrease in liability. Okay, that's correct. But the net effect on your equity should be increase. It should increase your equity. That's why letter C is wrong. Letter D, increase in liabilities, just like letter A, is outright wrong. Okay. But of course, if your assets if your assets increase and your liabilities decrease for some other reason, okay, then it will not be considered as an income. If assets increase because of uh, additional contributions from your shareholders, then definitely that is not an income. Okay, again, answer for number 9 is bravo. Number 10, which of the following is not an example of an obligation to transfer an economic resource? The question uh, may not make sense, class, but the best answer here would be letter C. As discussed in the framework class, the enactment of a new law should not automatically result in a new obligation. There must be a receipt of economic resources. There must be an exchange. Okay. While all three other choices, class, are examples of obligations. An obligation to pay cash is definitely an obligation to transfer an economic resource. Okay, and for letter A, even though it is for a specified uncertain future event, that can still be considered as an obligation. For letter D is basically a definition for a liability. It is almost always under unfavorable terms. So again, the answer for number 10 is letter C, because obligation does not automatically arise due to an enactment of a new legislation. There has to be an exchange of an economic resource. Number 11, which of the following is not an aspect in the definition of asset? Okay, the answer here is letter C. And there's nothing to argue here, class. The framework expressly enumerates the three other choices, that the aspects of an asset are your rights, control, and the potential to produce economic benefits. So again, the answer there is letter C. 12, first statement, the general purpose financial reports are not designed to show the value of a reporting entity, but to estimate the value, but it can be used to estimate the value of the reporting entity. We have discussed this in one of our earlier meetings, class. The first statement is a true statement. Second statement, the management of a reporting entity who is interested in financial information about the entity need not rely on general purpose financial reports because it is able to obtain the financial information it needs internally. Again, this is also a true statement. So the answer number 12 would be both statements are true. Letter A. Because if this would be the questions that will come out in your examination, then there should be no reason for you to not get it right. Number 13, an obligation is a duty or responsibility that an entity has a practical ability to avoid. This is the exact opposite of what an obligation is. Because for it to be considered as an obligation, there should be no practical ability to avoid the duty or responsibility. Okay, so nobody should think that the first statement is true. Second statement, an executory contract or a portion of a contract. Uh, an executory contract is a contract that is equally unperformed. Okay, and what do we mean by equally unperformed? When neither party has fulfilled any of its obligation, or both parties have partially fulfilled their obligations to an equal extent. Second statement would be considered true. So the answer number 13 would be letter D. Only the second statement is true. Number 14, which of the following is incorrect with regard to general purpose financial reporting? We're looking for the false statement, class. And the answer here would be A. The general purpose financial statements can provide all information needs of primary users. Again, as I've discussed before, this is how the question will make it confusing to you. Because to those who will not prepare for the examination, letter A would be convincing because after all, uh, the financial reports are geared towards the needs of the primary user. So one would think that they can provide all information. But as what we have discussed before, it's impossible and it's impractical for a single report to provide all information needs. So that means B, C, and D are true in relation to your general purpose financial reporting. It caters to the common needs of the primary users. That's true. It does not directly show the value of a reporting entity, but can be used to get the estimate or of the value of the entity. And letter D is also true. Uh, that in the framework it is referred to as financial reporting. Number 15, first statement, current value measurement bases include uh, fair value, value in use for assets, and fulfillment value for liabilities and current cost. Is the first statement true or false? True. There is no arguing on this one, class, because again, these four are enumerated in the framework class. Fair value, value in use for assets, fulfillment value for liabilities, and current cost. So actually, the first statement is a good source for a multiple choice question. Which one is not considered as a current value measurement base? Then out of these four, one will just be changed to other measurement bases. So please take note of the first statement. Second statement, the total carrying amount of equity is not measured directly. It equals the total of the carrying amount of all recognized assets less the total of the carrying amounts of all recognized liabilities. This is also true because supposedly what will be the alternative in measuring your equity? What will be the alternative? You get the value of your outstanding shares and whatever is the market value or fair value of these shares, then one can argue that that is the value of your equity. Okay, but if you do that, class, then the accounting equation will not be uh, observed anymore. So for the accounting equation to remain true, the valuation of your equity should simply be the difference of your assets and your liabilities. And after all, your financial reports do not give you the current value, class. So there is no point in trying to use the current value of your shares to get the value of the equity of an entity. So that means the answer for number 15 is alpha. Both statements are true. Number 16, which of the following is not a benefit derived by the information on economic resources? The answer here is letter C. Why? Because what is being described in letter C is benefit of getting information on your income and expenses, or otherwise the results of your operations or your financial performance. Okay, what does letter C tell us? It will help users to understand a reporting entity's operation, evaluate its financing and investing activities. If you're looking for the financing and investing activities, will the economic resources be enough? The answer is no. Okay, you will need your cash flows or your statement of cash flows to evaluate the financing and investing activities. And you will also need your income and your expenses to know whether your financing and investing activities are profitable. Although the economic resources can tell you about an entity's liquidity or solvency, but again, if we're talking about financial performance, the focus is not on your economic resources, nor on the claims against the entity. If the focus is on financial performance, the focus on would be on income and expenses. That's why the answer number 16 is letter C. Number 17, the enhancing qualitative characteristics, either individually or as a group, cannot make information useful if that information is irrelevant or not faithfully represented. By the way, what are your fundamental qualitative characteristics? Relevance and faithful representation. Uh, our mnemonic would be FR. for some reason, FR can be remembered easier than RF does. My classmate used to call these qualitative characteristics as father VCAT, FR VCAT. FR for your fundamental, VCAT for your enhancing. By the way, I forgot to share to you that I developed VCAT on my own. I did not learn it from anybody, and I was able to influence most of my classmates with VCAT. But of course, I'm sure if you've done your reading on your own, you would have also thought of VCAT. Okay, then my classmate just developed it further and included faithful representation and relevance. So he called it Father VCAT. What's wrong with is the first statement here true or false? True. Okay, because again, not no amount of enhancing qualitative characteristic can elevate the information as being uh, relevant and uh, faithfully represented. Okay, it must have the for it to be useful. The fundamental must be present. It does not matter how much enhancing qualitative characteristics it has. It can never elevate it as a useful information if it does not have faithful representation and relevance. Second statement, generally, the older the information is, the less useful it is. That's true. However, some information may continue to be timely long after the end of a reporting period. Easiest example here would be your historical information. Okay, so even if they are from the past, they are still considered useful. So uh, uh, the answer here is both statements are true. Number 18, these are the characteristics that make information useful to users. And our answer here would be A, the fundamental qualitative characteristics. Okay, number 18 is one of the questions I've told you, class, that are very straightforward. It does not require analysis, it only requires memory recall. So this would be the kind of questions that would be considered easy. And as what I have told you, class, your goal should always be to get 100% of the easy questions. And what else are you supposed to get 100% of, class? 100% of questions you have already encountered before. Doesn't matter if it's difficult or not. If you have encountered that question already in the past, by the time you are taking the examination, you are expected to get it 100% right. So that your errors can only come from difficult questions you have not encountered yet. Okay. Number 19, for information to be relevant, we've discussed this already. Information has to have predictive value, confirmatory value, or both. One of the two would be sufficient. Number 20, which of the following is incorrect about reporting entity? The first Roman numeral there, class, is a true statement. A reporting entity may just be a portion of an entity. Okay, but statement 2 is incorrect because a reporting entity need not be a separate legal entity. So that's why the answer for number 20 is bravo. Number 21, potential to produce economic benefits means what? Uh, the answer here, class, is B, as in bravo. Okay? Mere existence of the right will be considered as a potential to produce economic benefit. Okay, in fact, how does the framework describe a potential class. If there is at least one scenario wherein it can provide benefit, uh, then it will be considered to have a potential. This is one of the areas wherein the framework and the standards class do not uh, coincide. Because based on the framework, you will already have a potential to produce economic benefits as long as there is at least one scenario where it will be able to provide economic benefits. But in most standards class, the degree of probability class required for an asset or liability to be recognized is that it must be probable. Likely is not enough, it must be probable. But it does not also have to be highly probable. Okay? Does it have to be certain? The answer is no. Again, I'm talking about the standards now. Okay? You may recognize an asset or liability even if the economic benefit is not certain or the obligation is not certain. What is required is that it is probable. Does the standards require the probability to be high? The answer is no. Okay. But for your framework class, it describes a potential as long as the right exists and there is one scenario, at least one scenario, wherein it can provide economic benefits. So again, the answer in number 21 is Bravo. Number 22, the recognition of income occurs at the same time as the increase in the carrying amount of assets or decrease in the carrying amount of liability. Okay, although this is not the exact definition of income class, but the best answer here would be delta. 23, first statement, the concept of capital maintenance is concerned with how an entity defines the capital that it seeks to maintain. It provides a linkage between the concepts of capital and the concepts of profits. Okay, as contained in the framework class, this is a true statement. A financial concept of capital is adopted by most entities in preparing these financial statements. The second statement is also true. That's why the answer for number 23 is alpha. Number 24, which is incorrect concerning financial statements. The answer here would be, what's your answer here? Best answer here is letter C. Financial statements are prepared and presented at least annually and are directed towards the specific needs of the primary users. But can it be used by a wide range of users? Yes, but it is directed toward the specific needs of primary users. Letter A, although it's not the, no, letter A is definitely true. Okay, the management of an enterprise has the primary responsibility. Okay, because I used to tell my students, anytime you encounter a question wherein one of the choices include management class, almost always the answer would be management. Does not matter what question it is. From all the questions I have encountered class, if one of the choices is management, then almost always the answer is management. For example, the most common question is, who has the primary responsibility in the preparation of your financial statements? One of the choices would be management, other choices would be auditors, accountants, so on and so forth. Okay, the answer there is management. And there are a lot of questions wherein the answer would be management. Almost always, if one of the choices is management, the answer is management. Is this something that you're supposed to be learning class? The answer is no. But I'm telling you from the many questions I have encountered class, if one of the choices is management, almost always the answer is management. Why do I say almost always? When is management not the answer? The management is not the answer if you are certain it is not the answer. If it is very obvious that the answer is not management, then of course it is not the answer. If you are in doubt whether the answer is management, if you are unsure whether the answer is management, the safer path would be to choose management. Okay, but supposedly that's not the things you are supposed to learn from me. Letter B, although Management stewardship is not the primary purpose of your financial statements. It cannot be avoided that financial statements can show the results of management stewardship. Letter D is definitely true statement. So that's why number 24, the answer is letter C. 25, which of the following statements are true? Financial information without the two fundamental characteristics is not useful, and it cannot be made more useful by having all the enhancing qualitative characteristics. We've discussed this already. So, uh, Roman numeral 1 is true. Okay. And then, financial information that is relevant and faithfully represented may still be useful, even if it does not have any of the uh, enhancing qualitative characteristics. Statement 2 is actually true. Okay, what is required, what is needed lang for it to be considered as useful is that uh, it must have relevance and faithful representation. So number 25 answer is Charlie. 26, this is just the definition contained in the framework class. The accrual basis means that the effects of transactions and other events are recognized when they occur and not as cash or its equivalent is received or paid, and they are recorded in the accounting records and reported in the financial statements of the period to which they relate. So the answer number 26 is bravo. 27, first statement, an asset or liability can exist even if the probability of an inflow or outflow of an economic benefits is low. First statement is true, okay? But the statement should have made it clearer, class. Should have given context. Under the framework, an asset or liability can exist even if the probability of an inflow or outflow of economic benefit is low. Okay, that would have been the best way this sentence would have been stated. Okay, at any rate, since this is under chapter 2 of the textbook, it would make sense that this is under the context of your framework. So the first statement is true. Second statement, the use of reasonable estimates is not an essential part of the preparation of financial information. From that part alone, class, just be able to say that this statement is false. Okay, the use of estimates, especially because of the going concern assumption, class, is a big part of the preparation of your financial statements or your financial reports. That's why the answer for number 27 is letter C. Number 28, information about different entities and about different periods of the same entity can be prepared and presented in a similar manner. Comparability and consistency are related to which of these objectives? The answer for number 28 would be alpha. Comparability among entities, consistency across periods. Comparability among entities, consistency across periods. And that makes sense. You compare it with other entities, and you can say it is consistent by comparing it with the same entity but across different periods. Okay? Company A year 1 should not be compared with company B year 2. Okay? That's simply not the way to use financial information. Comparability among entities and consistency across periods. 29, which of the following is an argument against using historical cost in accounting? Okay? Letter A is true, so that should not be an argument against historical cost because historical costs are reliable. Okay? Fair values are subjective, that's true, but that is not an argument against historical cost. That is actually an argument for historical cost. I hope you understand the question. The answer here is letter C. Between historical and fair value is more relevant. Number 30, first statement, one of the purposes of your conceptual framework is to assist the preparers of financial statements in interpreting the information contained in financial statements prepared in compliance with the standards. Okay, this is a scenario class wherein our assist may not be enough. What did we say were the purpose of your framework? Assist the board, assist the preparers, assist the users. But here you will have to match the persons being assisted with their concern. Interpretation class, is it the concern of our preparers? No, that would be the concern of our other parties or our users. So that makes the first statement false. Second statement, the conceptual framework is not an IFRS and hence does not define standards for any particular measurement or disclosure issue. The second statement is true. That's why the answer for number 30 is delta.